Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Trading Hour on CNBC TV 18. I'm Ekta Batra and my co-anchor Prashant Nair will be joining us very soon. Well, it's turning out to be a session where we're definitely sluggish both for the Nifty and the Sensex, but it is definitely a struggle for the mid-caps. We saw the underperformance last week and we're seeing that continue into this week as well. So the mid-cap index is down around 1.5% and there are multiple stocks from the PSU banking space, from the a few from the private banking space, along with the likes of Jet, etc. All of them which had fresh 52-week lows. Besides that, there are also a lot of stocks in focus to talk about. So something like a Dr. Reddy's, which has recovered from the day's lows, so down around 8% right now. And something like an HUL, which is coming out with its numbers from the Nifty space today, so do watch out for that. Infosys, which has also recovered. Something like a DCB Bank, which is reacting to its numbers. Asset quality, which is coming at a 13-quarter high for DCB Bank. So quite a market to talk about, but most of it in the red at this point. Hi, Prashant.
Ekta, hi. The basic, I think, sort of thing which one is wondering is is the mid-cap and the small-cap side of the market going to pull the Nifty and the Sensex lower, or the strength in the Sensex, the relative strength in the Sensex and the Nifty going to pull the mid-caps and small-caps? Because this kind of divergence cannot continue for very long. Mid-caps and small-caps are 20-25% away from their life highs, and the Sensex is basically... It made a lifetime high last week. The Nifty remains under 2% from its life high. So there is a big difference. So either this will move up or that will come down. That I think we will find out as the day goes along. But for now, I mean, it's kind of mixed, right? From Friday's close, that is 10,990, 30 points lower on the Nifty, as you said. Sudarshan Sukhani of S2Analytics.com is joining in with some thoughts. Sudarshan, good morning. I mean, if you want to take off from that point that I was making, which is what's going to happen, which side of the market is going to influence the other?
Yeah, good morning again. Well, that's a very interesting point you were making, whether the mid-caps and small caps will win the day on the downside or otherwise. I think the Nifty is making small trading ranges at the top after that 500, 600 point rally. That is the first signs that market are stalling, that 11,050 is acting as resistance, and perhaps this is only a consolidation prior to some kind of a decline. So I would think, looking at the patterns so far, that it is the small caps and mid caps which will show the direction on the downside, and the Nifty is likely to follow suit. So we are looking at a correction of some kind rather than a rally. Okay.
What are the stocks that you'd be recommending?
Well, let me start with the cheer first. Tech Mahindra is a buying opportunity. Infosys, sort of confused us completely by actually opening lower and then moving higher. And that's good news for the other better software companies. So Tech Mahindra is certainly superior buy. Consider buying Tech Mahindra not only for the day, but also as a positional trade. My other trades are all on the short side in the financials. PSU banks are getting it on the chin again. I've been bearish on PSU banks since God knows when. Unfortunately, the bleeding doesn't stop at all. More lows are coming. So Union Bank is a short selling opportunity. So is Capital First. If you see the Capital First charts, it makes new lows consistently. But keep the short sales intraday. But the financials are not going to have an easy time. There's more downside.
Okay, all right, Sudarshan, we're going to let you go on that note. Thanks very much for joining in and talking to us. So those are some strategies and technical calls coming in from Sudarshan Sukhani. We have some more strategies lined up from the F&O space. Rahul Shah joins in to talk about what he's recommending. He's from Motilal Oswal. Hi, Rahul. Morning, over to you.
Hi, morning. I think what we've seen in last few sessions is that large caps taking a front seat and especially the heavyweights have been doing quite well in the Nifty space. So I think I would continue to go long on the stocks from that sector and from that list. So in that space, I think Kotak Bank, I think again at a 52-week high, and a stock has entered technically also in user territory as well as longs built up in F&O. So I would go long on Kotak with a stop loss of 1385 and target of 1445. Secondly, TCS post results, we saw a spectacular movement on the stock, and I feel still the stock can do much better and can go to 5 to 6% up from the current levels. So I would buy TCS with a stop loss of 1965 and target of 2075. And third, being on a short side, I think metals we have seen on consolidating and gains being given up in last few sessions. So I feel the best short in that play is Hindalco. So I would go short on Hindalco with a stop loss of 222 and target of 204.
Okay, all right, Rahul, we let you go on that note. Thanks very much for joining in. Well, before we get ahead on the show, just want to point out one stock. Federal Bank is the one that I'm talking about. That stock is in fact at a fresh 52-week low, down around 3% odd. It's lost 30% of its market cap this year. Why is it important? Is because it's coming out with its numbers tomorrow. So do watch out for that particular stock, especially after maybe the read-through for DCB Bank. There seems to be some trepidation ahead of numbers such as Federal Bank. But let's go across to Prashant now. He's joining in with a whole host of statistics and cues that he's been looking at from the global space. Prashant, over to you.
Thanks very much. The point is the mid cap and small caps are looking very weak. The large caps are looking relatively very strong. One is 25% away from life high. The other is near a lifetime high. What is going to prevail? Because, I mean, this gap cannot continue for long. Either the Nifty and the Sensex will come down, large caps will start to outperform, or the mid caps and small caps will start to participate as well. Well, it's tough to know the answers right away, but what we can do is look at some of the indicators which remain crucial to decide what the market course is going to be. So I'm just going to run through a couple of points here, and then we'll delve into a little bit of detail. So this is how things like the dollar, US equity indices, yields, etc. are set up. And I must say, this looks like a bit of an opportunity for bulls. I mean, just going by these numbers, sentiment is completely a different thing. So I'm putting that on another side. Sentiment as far as market goes and broader market is concerned isn't looking good. So if you can start with the first point, we've got a dollar which is near a bit of a reversal. We've got the US equity indices which actually are poised at a breakout level. We've got the oil market. It lost 5% last week. It looks like it's stopping. And we've got the Indian 10-year, which seems like it could head lower. Again, purely on charts, right? I mean, putting the sentiment and other indicators aside. So let's start one by one. The dollar. I'm talking about the dollar index and weekly charts here. It's essentially what it's done last week is that it has failed to sustain above its 200-week moving average. It's done so, it's failed to do so now for the last 2 months. And many are now starting to look at this as a bit of a failure and saying that maybe it starts to turn lower. Weaker dollar, generally good news for commodities. It's generally good news for emerging markets. Second, come to the S&P and the NASDAQ. I'm talking about the mother market, the US markets, which greatly influence what emerging markets, etc. do. The S&P 500 is testing the March high, the trend high that was made in the month of March, and the double bottom neckline, which stands at 2,802. The S&P, by the way, on Friday briefly traded above this level, but failed to close above it. You can look at the E-mini futures, the futures contract, the E-mini contract, the most widely traded contract in the world as far as stocks go, indices go. That, by the way, closed above this level on Friday. Expectation is that S&P 500 will do that as well. It will follow suit. NASDAQ, it finished last week at a new trend high. So that's US equity markets. Again, setting up in a bullish way. Oil prices, well, the level to watch is $72.45 a barrel on Brent oil prices, which marks the double top neckline. You watch this on a graph, it looks, of course, I mean, much more visually appealing, but it's again set up in a manner that it could actually start to drop a little bit from here, from where it is. So is it putting a top in place? There's a big question mark. The last one is the Indian 10-year here. It closed last week again below the head and shoulders neckline, which is 7.8. You talk to technicians, chartists, etc. They tell you the next target is about 7.5%. So dollar near a reversal, US equity indices poised in a bit of a breakout fashion, oil topping, the 10-year poised in a slightly lower way. I mean, it looks bullish. I mean, if you put all these things together, but as I said, I'm completely putting aside the sentiment, flows and things like that, and just putting to you what some of these important indicators and variables are looking like at this stage. Back to you, Ekta.
Okay, all right, Prashant. Thanks very much for that. But let's concentrate on the micros now. Dr. Reddy's is one of the top losers on the Nifty. It's recovered from the day's low, but still down around 7.5 to 8%. It is reacting to the fact that it will not be allowed to sell Suboxone, which is the generic version of that drug, in the US markets anymore, because a US court has basically converted a temporary injunction to a preliminary injunction. To talk more about this, we have Deepak Malik of Edelweiss Securities joining in on the phone line. Deepak, hi, thanks very much for joining in. Do you think that this reaction is a bit too much for the news on Dr. Reddy's?
Yeah, hi Ekta. Yes, I agree with you. It's an overdone kind of thing. So if you see this product, NPV is around 150 rupees, and it's only get delayed. And second thing, what court has also said along with the preliminary injunction is that in case if Endeavor lose the case, then he has to compensate Dr. Reddy for the losses, and for that he has to submit a bond today. So it's not something which is very, very negative. Yes, things have got delayed, but then in case if DRL wins the case in appeals court, and he'll get compensated for all the delays which will happen.
Okay, but obviously, Deepak, the market is reacting to an opportunity loss in terms of sales as well as EPS addition. So in your sense, how much do you think that they were probably going to make in the next 1 year from this particular drug?
So we were not building in this product for this year because we knew that this is an uncertain product. So though Dr. Reddy has got the approval, but and the court outcome, the case outcome was uncertain, so we were not building in. And in fact, consensus also, if I say 110 rupees of EPS has been built for FY19. If this product would have come, so it would have added around 50 to 60 rupees of EPS. So I don't think even consensus was building in the launch of this product for this year. So I don't think.
Okay, so there's a possibility that best case scenario could have been up to around 50 to 60 rupees in terms of an EPS addition.
Yes.
Okay.
Yes.
But obviously there is uncertainty which the market is factoring in. So is that the reason why the stock is down 8 to 9%? The fact that we don't know the outcome of what an appeals court ruling would be, plus there is that final patent litigation which is currently ongoing with the innovator.
Yes, so if you see, all the pharmaceutical stocks have run up by almost 15 to 20% in the last 1.5 months, partly due to the reason that INR has been depreciating and people were underweight in the pharmaceuticals. So now with this negative news again, there's a reality check and people have, I think, taken up the profits.
Okay. In your sense, what might the future triggers for Dr. Reddy's be beyond Suboxone?
So the first and very important thing is the NuvaRing approval, which we are expecting in the next 3 to 4 months. So Dr. Reddy has a TAD in the month of July, and let's see how things pan out there, because that is a very important product. So patent has already expired, and Dr. Reddy has already replied to the CRL. So now there is a target action date, and we are waiting for the outcome. So this product is a $550 million product, and DRL is expected to make around $80 to $100 million in this product. So if he gets the approval, that is number one. And second thing, in Srikakulam also, we are expecting the positive outcome for Dr. Reddy very soon, because already whatever was supposed to be done in this has been done by DRL. And things now should resolve for Dr. Reddy in Srikakulam. Then third is that he is going to invite the US FDA for the Voda plant. That also will happen in the next 1 quarter. And by the time we'll reach to Q3, so there are 2 more things which are lined up. One is the approval for sumatriptan nasal spray, so where there is a TAD in the month of January 2019, sorry. And Copaxone also is lined up for approval by the 4th quarter. So I think this year is going to be a very eventful year for Dr. Reddy. There are 6-7 triggers which are lined up. So I'm not saying that all the triggers will come, but yes, some will come definitely.
Okay, just a quick word, Deepak, on Aurobindo and the acquisition that they've made in Europe.
So I think it's a good acquisition because US is now getting very competitive, and Aurobindo is now diversifying itself into Europe. Last year also they acquired a business in Europe, and now they are further expanding into OTC and all. So it's a good move.
And what if they acquire bigger companies such as Mallinckrodt?
So there,
bigger companies such as Mallinckrodt?
So there, I think there the sale is largely from the U.S. market, and it's in controlled substance. So in controlled substance, there is a hue and cry in U.S. and government is after all these companies as well as the doctors not to prescribe these controlled substances, because that is leading to a lot of deaths in the U.S. market, U.S. As a country. So that business is a declining business. If I say in the last 2 years, revenue has declined by almost 25% for Mallinckrodt in this business, and the margins also used to be like 35-40%, has now come down to 20%. So it's a declining business, one. And second thing, there are a lot of cases also in the court which are there against the company. Sure. So it's not that great a business.
Okay. All right, Deepak, we're going to leave it on that note. Thanks very much for joining in and talking to us. So that's the view coming in from Edelweiss. For the mid-caps, extending losses as we speak, so down almost around 2%, 300 points gone for the mid-cap index, but for the Nifty and the Sensex still holding.
We've got the market, which is not doing, it's actually breaking down now. 46 points on the Nifty. So we've got another leg down just in the last 10, 12 minutes or so. It looks like for now, although it's just in the last couple of minutes or so, worth of move, the large caps are selling off, and it's not any buoyancy in broader markets. But I think Lupin, Ekta, you want to talk about that?
Yes, actually, it's important because, the US FDA has a warning letter on the Goa facility. So that's exactly why a UK inspection becomes important for Lupin. But they have said that this took place in March. I have a feeling that this was largely known. And they have said that there were no critical or major observations by the UK MHRA for the Goa plant. So these are the updates which are coming in with regards to that. So if in case you do get a go-ahead from the UK MHRA, it's always a positive sort of signal in terms of the other regulators, but not directly generally when it comes to the US FDA. So that's the update coming in on Lupin. But we have Manisha Gupta joining in to tell us about the metal space.
Well, yes, thank you so much for that, Ekta. This is one sector which I'm assuming, since the the underlying commodity is not doing so well, so I'm assuming the metals, as in sense of metal stocks and equities, wouldn't also be doing well, because almost everything is under pressure. You have seen the China second quarter GDP numbers come in line with the expectation of the market, but that in any case had been on the lower side because we have seen a slowdown come in there. Apart from that, it also has to do with the China steel output curbs. That has led to decline in ingredients as well. So whether it is nickel or zinc, they have started the Shanghai market slightly on the weaker side. And aluminum, in any case, has been under pressure. We saw it trading at a 3-month lows early in the Asia today, and that is in expectation on what the US and the Russian presidents could talk about in the summit in Helsinki. The expectation is that you could see some sanctions being lifted or eased on Rusal, and that would lead to the aluminum supplies come back into the international markets. So some pressure onto that metal as well. But it clearly hasn't started as a very strong week for the metals as a space, starting right from steel to iron ore to nickel, zinc, aluminum. Everything is trading in the negative. Hong Mai Lee of My Steel Singapore now joins us to talk more about that. Hong Mai, hi. Thank you for your time. What is your sense, first of all, on the Chinese economic numbers? What do you take away from that?
Hey, hi, Manisha. Thanks for having me. I've been looking at the numbers since last Friday and this Monday because China issued all these numbers, imports, exports, output, and and economic growth. But I tend to disagree. Like the GDP, if you're looking at GDP Q2, we're looking at 6.7, and then for the H1 first half, we're looking at 6.8. It's still within the market expectation, the Beijing's expectation as well. I think this kind of a slowdown is pretty much expected from China and elsewhere because China is going for the quality instead of the quantity. But having said so, I do notice that the prices have been going down a little bit for non-ferrous metals as well as steel. Part of the reason is I think there are some concerns about the forthcoming months. What will be happening to the U.S.-China trade friction? It seems that nothing has improved yet, so all these kind of non-ferrous metals and steel definitely will be under the pressure. But having said so, looking at China's the steel output number increased by 6% on year for the first half. Even so, China's domestic steel prices have been holding fairly well, I would say. So domestic-wise, I don't think that would be the major uncertainty where it is. It's more about the global trade environment. Yeah.
Oh, well, absolutely. That's the other thing I wanted to ask or talk to you about, because the markets are anticipating some kind of a response or retaliation from China yet again on the second list that came in from US. How are you trading on that right now?
From all along, China have been making it very clear it will not be fire the first shot, but whenever there will be some measures against them, they will fight back. So if, let's say, the U.S. talking about the $200 billion, if it becomes a reality, China definitely will fight back. I think that's pretty much for sure. And then we're already seeing from what has been happening, like the U.S. has thrown tariffs on China's commodities, and China lists out all the items that will be hit with China's tariffs as well. So I think this pattern will continue in the future.
What's your sense, given the kind of global scenario or environment that we are in? What is the best case forward for the metals? Do you see further declines come in, and if yes, by how much percentage?
For the time being, I think the whole global market is trying to find a new mechanism and new structure. There are some commodities moving elsewhere from the U.S., from the China, the route, and then so China have been working very hard to build up the relationships with the other countries. Last week, we noticed that China and Germany signed a number of contracts talking about the cooperation on a number of aspects, and then auto industry as well. So I'm thinking that for China, they will be working on different ways, and then this means that the commodities will be, the routes of the trading will be changing as well. Whether this means that the prices will be going down or going up, I think for now it's a bit too early to predict.
Okay. One final question on really the steel prices. What is your sense on that? Because even as the Chinese have been curbing output, we have seen a record number of production continuing from that state.
Well, I'm thinking that actually for all these kind of things, we at the end of the day, you have to look at all the prices. If the prices have been holding well, it means that whether there's a kind of high production, low production, it doesn't really that matter, because that it shows the market, the prices are showing the sentiment, and then the sentiment stays strong, and then so the price is holding well. So that's the end of the story, I think.
Okay.